All right, good afternoon, traders. How's it hanging? I'm an associate member of T3 Trading Group, which is an SEC registered broker-dealer and member of FINRA. All of my trades are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. Position disclosure. I stopped myself out of the Wi-Fi, the WYFI. It failed. Well, it actually never technically triggered. I tried to front run the breakout, and I was giving it some to 17 on a small position. Lost a little bit of money, got stopped out. I got out of BABA after hours yesterday. So it's no longer in the position disclosure, got up to 140. I still really like it. It's just a big 3-day move, so I want to wait for it to reset up and then potentially have a look at getting back involved. After hours, we have Salesforce just reported earnings, and they're trading down on it. I have not looked at the numbers. Let's take a quick look here. Salesforce sees third quarter revenue pretty much slightly light. Salesforce sees fiscal year revenue also that looks pretty in line. So we have a small miss, it looks like, on third quarter revenue from Salesforce. So Salesforce is trading down just a tiny bit on that. It does not seem to be too dramatic. It's already bounced back off of its lows a little bit. On the flip side, got American Eagle crushing the game of 23%. I hear they sell good jeans. Second quarter net revenue is a beat. Yeah, second quarter sales top estimates. All right. AEO in the house. AI reporting here after hours and getting smoked. This thing consistently gets smoked. C3 AI. Such a popular symbol they have that makes people want to buy it, but this thing is consistently getting smoked on earnings reports.
It's not really good that they're getting a new CEO already.
Yeah. New CEO coming in. Sydney Sweeney and AE, American Eagle. AEO is a symbol. All right, so that's what's going on here after hours. Let's jump into our usual afternoon meeting here. SPYs are up 0.5%. Qs finished up 0.75%. The IWM finished exactly flat. So we had relative weakness from the IWM. That was all over the place today. Right at pre-market, the IWM was relatively weak. The Qs were strong on the backs of Apple and Google. We can talk about that in a second. And then right away at the open, they faded the Qs a little bit and ripped the Russell higher. So we had like 15 minutes of really good relative strength from the Russell. And then they faded that IWM down the whole rest of the day, closed flat. TLT here, back up 1%. You know, this seems like it's the big talk, right? Bonds, particularly the long end, a lot of chatter on the UK debt situation, a lot of chatter on Japan, a lot of chatter on the United States as well. But we never really, in my opinion, see any danger coming in from this TLT. Could it happen? It could happen quickly. It sure could. But people who've been looking for that have been continuously disappointed. This TLT continues to hold in. It's been very range bound now for months. So I really don't see a problem there at all. The dollar, you know, kind of same deal. The 27.50 I was thinking is important for the dollar. Every time we get above it, this UPTF, we don't continue and we come back down. So still trading right around that 27.50. Nothing dramatic there either. How did the Bitcoin do? The Bitcoin was up a little bit. Ethereum had a big day, big snapback day today. And gold gave further continuation as well. Gold up 0.75 percentage point. So hopping over to the charts, before I look at this 5-minute chart, I'd rather actually just start with the daily today. So when you look at the daily chart, we're just very, very mid-range right now again. I kind of feel like we were just in this situation. You could especially see it in the Qs in like mid-August, around August OPEX, where we had traded down a little bit, we bounced back, but we couldn't really, again, especially in the Qs, recapture any key upside levels to get the market back to bullish. We couldn't break down through any key downside levels to get the market to bearish. So it's been very kind of range bound, especially with the Qs. The SPYs here
I get it, man.
were
I just wanna make sure
stronger.
I'm not, you know, I didn't know how serious you wanted to get it up and running. You know,
The,
now
the
it's
SPYs here were
so
stronger
it's a
into
little
this
bit.
bounce back here, but
I
now
get you.
they're also kind of range
keep
bound,
trading,
right?
man. I'm
So
not trying to bring you away from making money, brother.
just to recap these last couple of days here,
All
Friday was a really important trading session. I still think Friday is a really important trading session because that's when that Alibaba news came out that I think is furthering the relative weakness in the semiconductors and really helped boost Baba higher on what was otherwise just an okay earnings report. So that news really helped hit the entire market down. Yesterday, as we know, we had the gap down, but we closed on highs. We talked about that in yesterday's afternoon meeting. Then as soon as the market closed yesterday, we had Google and Apple ripping up. And Mag 7 companies, market cap weighted indexes, you're just going to obviously move the market up big when the two biggest companies are moving higher on that type of positive news. So we had the gap up today, and the thing about where we gapped up to is, again, it's just very mid-range. That's what I'm talking about. So these really important levels that I'm watching for pretty much all the indexes are Friday's high and yesterday's low. If we get back above Friday's high, once again the technicals turn into full-on bullishness. If we get below yesterday's low, then we actually start to become much more bearish looking for both the SPYs and the Qs, and maybe we can get a roll down on these moving averages and moving average cross, all that fun stuff. Here we are is mid-range though. So I didn't feel like I had a strong advantage trading today, and I do think that one of the most important aspects of being a successful trader is knowing when you have a strong advantage and knowing when you don't. We've had a lot of these types of range-bound trading sessions recently where at the index level I have felt we have not had a strong advantage. That's why yesterday was so much fun, right? You had the big gap. That big gap is very tradable. We can have good strategy. We're looking for the opening long that worked. Then we were looking for the short into the ADMA area yesterday. That worked really well. Like, gaps are great. They give us an advantage, especially when they're really big. But this morning, when you have a mid-range market, there's just not much going on. We did gap up, though, and we gapped up into some resistance of another gap fill, actually. So what I said in the morning meeting was that we have some resistance between the 643 and 645. If you can get decent pricing on that, like near where we were in the pre-market high, maybe you could look to fade that a little bit. And I was mentioning in the morning meeting, probably don't do it with a lot of size. It's hard to have a lot of conviction here. In order to have more conviction on this market, like I was just saying, we need to see either that break higher or that break lower of this range that we have found ourselves in. So we're in a little bit wait and see mode. And, you know, the market, when you look at the 5-minute chart, was very tricky today. That opening fade kind of worked a little bit when we ended up calling it on the small time frame, but then pretty quickly after 10 a.m. we were making new highs. The new highs didn't lead to anywhere. Then it looked like we were grinding lower and we were going to have a weak close. Then the last 30 minutes, we retraced the entire day's move. We had a nice little buy on the MOC. We closed at highs. So bottom line here, it's kind of a nothing trading session. Just know your important levels in the S&P and the NASDAQ, and when we can get above or below them, then we can have more conviction on the directional move of the market that will follow. As far as trading goes today, there were some names that were moving. We were able to pick our spots a little bit. I was taking an approach to be really conservative on entries on some counter trend trades, and it worked out really well. Every day trade I took today was a profitable trade. It started with Google, shorting Google here at this pivot high off of this extension, basically on the way down. Some people, again, I was very conservative on that trade. I just caught a move down to like 229 and I was out. But really, it fully fulfilled the price correction down to the ADMA. Great spot to book profit. Nice, cute little winner. And then you're out of the way. And Google kind of spent the entire rest of the day digesting. Similar but different was a HIMS trade. Shorted HIMS here basically above 45 into this up move. Pulled back, not even to the ADMA. Another very conservative game plan for me. So I was out by that move, not even looking for the full move to the ADMA. And that was it. Took Tesla at a certain point. This trade was trickier because I definitely started too early, but I started small. And that's also why when you think about trading from a game planning and a strategy perspective, you have to be thinking about all the different components of risk, right? Risk is a function of size and space. So you could be really small and be able to give more space and potentially be comfortable, or you could be much bigger, but if you're much bigger, then you're not going to be able to give it nearly as much room, and you'll potentially be losing a lot more. And some of that's a function of just understanding the level of volatility that's in the market and the stock that you're trading, right? Because certain times, certain market environments, there's a lot more volatility, and if you take smaller size, you might be swinging your P&L and risking as much as you would normally on much larger size, but the movements are so much bigger, you have to account for that. You also have to account for the fact that, you know, some stocks are higher beta than others, some are moving much bigger than the market is, and Tesla was moving big, and it was moving big on volume. So I started shorting this a little bit real small on the way up at 339. It was too early, but I was so small that it didn't matter. I was able to trade this really well. We noted this like triple pivot high here that came in. This thing was really struggling with 342, and I was getting heavier into those zones and was fully out of the position into this down move. I think I fully liquidated the position at like, I don't know, 339.80 or something like that. So inherently that means I took a loss of 80 cents on my initial entry, but the initial entry was so small compared to the other backing and filling and cash flow trading that I was able to do, that I'm able to liquidate this position, recognize that I was too early, meaning that I was wrong, but trade it in such a way where I'm able to get out of this for what actually turned into that I even though this is the one that I was too early and I had to hold against me a little bit, this is the one that I actually made more money in than either Google or HIMS. So, you know, positioning, sizing, and understanding that is just a really important aspect of game planning and successful trading that everybody needs to keep in mind. And then, like I mentioned before, I got stuffed out of this Wi-Fi. Just didn't do what I needed it to do. It's a low float, so this thing could really squeeze if it wants to, especially recent IPOs. We see that happen sometimes. I bought it yesterday versus 17, but really the breakout is like 18.50 to 19, so I was front running that. And it just didn't work out today, and I got stopped out. So I ended up losing net a little bit of money on that, but not too big of a deal at all. We got Fig. Fig came out. Fig's down further. So that's all I've got. Again, not really too much to talk about on the index level. I'm happy to answer any questions that anybody might have. From Scotty, please explain fade. Fade is just a term that we use in trading that means like go the other way, basically. So like, I already don't remember the context in which I was using it. It might have been with Tesla or really any of those. Tesla, Google, HIMS. I faded all of them. So you like fade the move. Like Tesla's going higher, I'm shorting it. It's just a term that we use to basically say that you're going counter the movement of the stock. You're fading the movement of the stock. So yes, SPYs. I don't remember what context I use it in, but that's basically what that term means. From Liam, let me know if you have any follow-up questions on that. I think I covered it. From Liam, for a recent IPO like Fig, do you have to wait for some type of reversal pattern? You mean to go long? Yeah. So really, like, the best patterns on some of these recent IPOs. So one thing I've learned, to take a quick half step back, and I should have done a better job when we first started seeing IPOs like CoreWeave come out, is IPOs tend to happen in like cycles almost, where if the economy's not good or the market's not good, companies don't want to go public because they don't think that they can raise as much money as they would like. So they want to wait for it to be an advantageous time. And the investment banks, they typically, you know, they make money from IPOs. So they want to have good IPO cycles. And then when those cycles come around, they definitely want those first ones to be able to really perform, because that like sets off the heat to get more and more IPOs kind of coming out. But what tends to happen from my experience and practice is when you're at the beginning of like a new IPO cycle, the first ones are usually the best ones. A lot of times they're the best the better companies, and there haven't been any IPOs in a while, so they come out a little bit more conservatively. And you can look at like this CoreWeave, or you can look at Circle. Those are like the first couple that I remember of this cycle. And one of the best trades is just like when it creates an initial range after its first handful of days, and then eventually at some point in the future breaks that range. And that's what CoreWeave did. That really just broke that thing higher and created the continuation. Or Circle was a little bit different because they boosted that really early, different but same. Third day up, pulled back, so now you have this pivot high, and then when it breaks, the stock was able to just go bananas and give some incredible continuation. But then when you start to get later and later in the cycle, they get greedier, right? The companies that start to come out are not as good, and they open them at even higher prices because they kind of feel like they can get away with it because there's enough hype, because people remember the CoreWeaves, they remember the Circles, and they're like, all right, we're going to be able to find some buyers for this because people who feel like they missed out on CoreWeave and Circle, and then they're willing to buy the next big one. And honestly, I feel like this FIG is one of the better companies. But I remember listening to, I don't remember who, one of the podcasts I listened to, financial podcasts I listened to that has some smart people, and someone reminded me where the IPO price was. I think it was like 30 something, and they were like, the guy was like, I'd be willing to pay even up to 60 for this. I think it's that good of a company. And then they open the thing at 85, and then the stock is at 143. The stock's at 143 by the next day. Like even someone who was like, I'm willing to buy at 100% premium or so of the IPO price of $60 couldn't even buy it. It's that kind of ridiculous. But that's what I'm saying. Like, this is a real company. But people have the FOMO of the CoreWeaves and the Circles and things like that, you know, they're willing to chase. And then it as the cycle goes, a lot of times it honestly continues to get worse. It's not a 100% thing. You can still have some good IPOs. You can still have some good companies that IPO. But it tends to get that they're just opening these things at too high prices, and the companies get not as good as well, kind of over time. So, you know, that pattern I was just talking about, like a CoreWeave is a really good pattern. That's pretty much what I was looking for in the Wi-Fi, by the way. It was basically, they sold this down on the IPO day. It actually goes back to what I was just talking about cycles of IPOs. We're getting later. I don't know what this company is. I haven't done any research on it. I was just purely trading the technicals. But whatever it is, they opened it too high. And that's why they wrecked it down on day one. And then it created this kind of bounce back resistance pivot high at $19.
Can you put those
so
away? It's a little
this like $18.50 to $19 is that level where I'm almost thinking similar but different to this opening CoreWeave pattern. Like this kind of opening range kind of breakout of this thing where if you get above, it maybe could go. And then you combine that with the fact that the quiet period ended on Wi-Fi yesterday. So the analysts were able to come in and begin to, you know, provide their price targets and buy initiations and all that stuff. And all the price target and buy initiations were in the upper 20s to upper 30s that I saw. So like, all right, you know, maybe, and it's a low floater. So like, all right, maybe this thing can get running and break this range and kind of begin to go. So like I said, I front ran it yesterday. Was one to give to $17 on what I front ran. Wanted to add through the breakout level if I could. It can get really thin, $18.50 to $19, and then just see if it runs. So you know that's pretty much the trade there. So and when it comes to FIG, what we were looking at, what a lot of people were looking at, was this base, this wedge. It's a descending wedge. To see if this descending wedge can break to the upside. Remember, a lot of people here, including the VTF, are talking about buying the break of that wedge to the upside. And that would be an acceptable pattern. If anyone remembers, I actually kept talking about the other side. Every time somebody brought this thing up about buying the break of this wedge to the upside, I was like, yeah, you probably could also short the break of the pattern to the downside. And then that trade actually worked really well yesterday, but it was right in front of the earnings report, so a little bit tricky to trade. And now here we are with earnings after hours, and the thing might actually finally be at a price that's more reasonable to look at longs, just from maybe like a more valuation type of perspective. So, you know, FIG, we'll keep an eye on that FIG, but you definitely want to set up. You don't want to be, literally any person who has ever bought FIG since it IPO'd is down money on it. Every single person. So unless you actually got it on the IPO deal. So appreciate the question there, Liam. From Michael S. Usually like fade the gap. Yeah, fading the gap isn't just another example of that. You fade movement, right? So if you have a big gap up, then you're fading the gap. Like a fade away in basketball. Okay, yeah, I never thought of it like that. From Liam, do you try to short these things when the lockups end? Sometimes it really depends on the situation. The surface level thought process to that is yes, and I know it's what a lot of us were like waiting for with some of the ones that were going crazy, like CoreWeave. Like, oh man, when CoreWeave approaches its lockup, that looks like it'll probably be an extra good short, because the insiders have got to be dying to sell that thing. That move it had was ridiculous. They were probably itching to sell that thing at 170. So traditionally yes, but not always, because the market's smart, right? So sometimes the market sells things down in anticipation that the lockup expiration is going to occur. Everyone knows the lockup expiration is going to occur, so they sell it down, they sell it down, they sell it down right in front of it. Snap comes to mind. Snap, they destroyed this thing. It was a really big flow. There was a really big lockup expiration that was going to be happening after the IPO, and they had just absolutely wrecked this thing lower. And then that was a major bottom, was actually the lockup expiration day. Pretty sure it was this day, actually, if I remember correctly, like August 14th. And that was an absolute bottom. They sold this thing and sold this thing. It might have actually been this day. Might have been the 3rd. I don't exactly remember. But I remember it was like a major bottom for the stock. They sold it down. They sold it down. Everyone was talking about the giant lockup in Snap, how bad the stock is trading already. And then that turned out to be a major bottom for it. Wi-Fi technical lottery ticket? I don't like that term necessarily. I think it was just a technical trade that, I don't know anything about the company, so I would say maybe a lottery ticket based on the technicals is something you could say if it's a really bad company, but I know nothing about the company. So I don't know. For me, it's more just like these low floaters, especially when you're this early after an IPO, you're pre-lockup expiration as well, so you can potentially get the break higher. The late bloomer pattern for the IPO, I'm not sure what that is, Tate. Rich says, don't forget to get your Powerball ticket, $1.4 billion tonight. I don't really ever gamble, and I don't really ever play the lottery. When you get a really, really big one like that, I did buy a Powerball ticket. When you get a really, really big one like that, sometimes it's fun to spend $2 just to joke around about, what are you going to do if you win the $1.4 billion, stuff like that. I'm with you, Scotty. I might take a little break. I might get flat. If I hit the Powerball, I might get flat. I haven't been flat in I don't even know how many years now. 9 years or something probably. I might get flat and disappear for a month, and then I'll probably be back to trading. Tate giving us the late bloomer trade. Yeah, so it's similar but different. It's kind of the break of the opening range to some degree. First trading week closing price. Initial top during the IPO advance phase, resistance at that previous high, downtrend, and then it breaks back above. Yeah, I like it. That's a good pattern. Arm Reddit, yep. Well, let's look for more of those, Tate. Try to communicate those. Let's make some money. Formula One is reminding me about ABTC. We were joking about this one today. You had to buy it because it's American. Oh my gosh, this thing's probably a 0. Yeah, whatever. Crazy stock. Multiple halts. Broke lows. Never actually traded it. Are the Trump families involved? I had no idea what this thing was. Alright. Nice. Probably a scam. How do you feel about scaling down on a trade going against you? For instance, say you enter at 10 and your pivot low on the long is 990. Have your first stop loss there and then the second at 980. Double the first stop loss level. And like trim and trail basically in reverse. Stopping out half at 10 cents, the other half at 20 cents. In case the trade is still good, but a tail shook you lower first, if that makes sense. I kind of understand what you're saying. I'll do something similar but different, where I trade with multiple stops. What I don't like about what you're saying is that it feels very random to me. 10 cents and 20 cents. Why not 15 cents and 30 cents? Why not 12 cents and 24 cents? I don't like random in trading. What I'm seeking to do as a professional trader is, as much as possible, remove the randomness from trading. That's what I want to be able to do. So that means that my stop losses should all be based on something. So sometimes you can make a case that a specific trade justifies, well, you could put a stop loss here, which is a little bit tighter, or you could put a stop loss here, which is a little bit looser. And sometimes in that situation I will do both. And then I'll be game planned on both also on the upside. Meaning I got 2,000 shares, one stop loss is 10 cents risk, one stop loss is 27 cents risk. So I've got $370 worth of risk. And then I'm also game planned where 1-to-1 is selling 500 shares at 10 cents profit and 500 shares at 27 cents profit. So that's something I do. Cool. Got you. What else, guys? Anything else? WDC. If this ends now, it's one of the earliest meetings ever. Josh is trying to. They've got like fantasy football stuff happening here at the office with some of these risk people and operations people, and it's I don't know. To me, it's like they're playing children's games around me while I'm trying to do real work. But anyway, WDC. Why was this up so much today? I have no idea why this was up so much today. It was completely off my radar, but it was great. So, worth keeping on the radar. It's a little bit too extended right now. Yeah, SPYs I consider us neutral, Qs I consider us neutral, and IWM I consider us bullish. Still, so neutral, bullish. We've become bearish below yesterday's low. Alright guys, anything else for today? Otherwise I'll wrap it up. They did order pizza, so I'm not going to partake in the gambling children's game, but I will partake in the pizza. What is the pie? I think they got 3 pies or 2 pies or something. I don't know. I think it's cheese and pepperoni, and I think they got something else. I don't know where they ordered from. I didn't participate in any of that. I'm just gonna reap the rewards. It's definitely not Papa John's. I can tell you that. Papa John's isn't even pizza, nor is Domino's, nor is Pizza Hut. They're their own unique category of food, and that's fine. Sometimes you're like, you know, I'm going to be drinking till 3 o'clock in the morning and whatever, and then I'm going to order Domino's. But don't tell me you're going to be ordering pizza, because that would be a lie. You're ordering Domino's. Apex Joy wants to know what I think of the GLD Doji. I mean, look, it's just very extended at this point, so it needs some backing and filling and digesting. I think that's what this candle tells you, that this thing could use some rest. Alright, gang, I'll wrap it up there then. Reddit thoughts from Liam? Sure, why not? Ooh, I don't like that upside tail. Oh yeah, this Reddit was an interesting one today, because I looked at it in the morning meeting, and I looked at it during the day at a certain point. I loved the breakout. The breakout was phenomenal on this. And then it pulled back too deep. And I remember we were looking at this at 227, and I was like, I like it for a bounce back, which never even really occurred. And actually, that might have been here. Might have been the break higher again on 227. Like, I like it for a bounce back here, but I thought that the percentage retracement lower was just too much by that point. So the idea of getting like new highs in this is very low probability, which then inherently means that your reward is limited, and I don't really like limited reward. But this was a really good looking daily chart of a trade that just failed. And after this, with this upside tail, then I think it's kind of just done. So that's where we're at. All right, gang, I'm gonna wrap it up there. Have a great night. See you all tomorrow.
Okay, so we still, all right.